afternoon, happy Friday. Welcome to the Market Watch Weekly. It was a down week for North American benchmarks here, giving back some, but not all of last week's gains. What we saw here this week was a rotation out of the leaders into the laggards, which gives you a bit more of an optimistic feeling here going forward for the sustainability of this rally. What we also saw was a refusal to generate much downside momentum here, both Thursday and Friday. Initially, it looked like they're going to be pretty big negative days. Market quickly reversed course and actually finished up positively on both those days, which gives you a little bit more optimism here going forward. Elsewhere, we saw oil finish up higher here for the third consecutive week, closing in on that $30 a barrel mark. Helping the price there was storage pressures beginning to wane a little bit, uptick in demand. Saudi Arabia also announced that they would be voluntarily shutting in about 1 million barrels per day in production, so that goes a long way to propping up prices. Elsewhere, we're about 85% through earnings season, which continues to show that companies entered this crisis basically on a very strong footing. The first few months of the year were actually playing out to be a record year for corporate profits. So bit of a mixed bag there, but forward guidance, sort of commentary out of corporate calls and analyst calls has been that March and April were a horrible month, but things have definitely started to improve a little bit. Looking to next week, we've got inflation numbers and retail numbers out of Canada. Don't expect much out of those two as far as this week's Market Watch commentary is concerned. Talks a lot about consumers in the labor market and the importance of consumption as far as GDP is concerned and how that sort of translates again into a stronger economy here going forward. Otherwise, hope everyone enjoys the long weekend. Stay safe out there and take care of yourselves. Cheers.